Hi, I'm Ant Joblin, and this is Smart Money, the show where we lift the lid on the hedge fund world to show you where the masters of the universe are buying and selling. What's probably the biggest sign of confidence that a company can provide you as an investor? It would probably be if a director or officer were buying more shares in the firm they run, right? Well, today we want to show you an example of this that has this activity going on right now. OPKO Health Inc. is involved in the discovery, development and commercialization of pharmaceutical products, vaccines and diagnostic products. Their two main products are Rayaldee, which is prescribed to patients with hyperparathyroidism, and 4K score, a blood test used in prostate cancer diagnosis. With a turnover of $228 million, down from $291 million in Q4 2019, the firm has seen a relatively big fall in revenues. However, are there indicators that this is going to change? Over the past few weeks, senior executives at OPKO have been buying shares back in a pretty big way. Dr. Philip Frost, CEO, has been buying blocks of shares, increasing his holdings from about 30 million in July to 167 million in November. Dr. Frost is not just a committed CEO who believes in his company. He is an active investor in the medical sector via his entity, the Frost Gamma Investments Trust. As a medical practitioner and investor in this sector, when he moves, people pay attention. Why else should we be excited though? Well, we must take a look at the share price. The last time OPKO traded at this price was in December 2009, right before we rallied to all-time highs at $19. That is a gain of approximately 3,256%. Of course, this doesn't necessarily mean that we'll see a repeat, but investing is a game of chance and the analysis of probabilities. At current prices, the charts look technically sound from a risk to reward basis. But are there other drivers here for a big upside move? With the recent earnings report, it was found that OPKO's earnings per share losses were less than expected, whilst earnings were in line with expectations. This increase in margins has caused analysts to revise their price targets upwards, and this is likely going to lead to brokerages updating their clients on the potential opportunity to be found here. In other words, higher demand. Potentially, cautious investors might wait until prices trading above the 200-day moving average before considering making a move. However, with the fundamentals in confluence, we might see more willing to act sooner. That's all for now. I'll see you next time.